the sun came out. I'm here in London, so it's, I think, a great time to start with the introductions and the objective of the webinar, and I think we should get started. So again, thank you for joining in. Climate finance. So what now for CFOs, IROs, and CSOs of corporates? Anyone operating in that space from one way or another, climate finance, sustainable finance, understand that there is kind of a negative narrative going on, especially in the West, for sure. And so this gave us inspiration to organize this webinar. And the themes we're going to talk about is what has changed compared to, call it, a year or 2 years ago. What's the value for CSOs, IROs, and CSOs from climate finance, if any, and how to do it well. I'm Fabrizio Palmucci, founding partner of Impactivise. We are a London-based, I'm sitting here in London, so London-based boutique advisory firm helping CFOs, CSOs, and IROs enlarge the investor base through the lever of climate finance. But I'm not going to be alone here. We are really lucky to have with us Patricia is going to join in a minute. She's joining from Milan. But let me introduce her briefly.
I'm here, sorry.
Super. Super. I don't see you. 1 second. Okay, yeah, I see you now. Okay, super. Ciao. So Patricia Gentile, calling from Milan. Thank you, Patricia, for joining us. Group Head of Finance and Insurance at outweigh, the leading multi-utility in Italy, but outweigh is leading in many, many ways, as we will discover. And as well from Roma, Gianfranco Di Vaio, Head of IR and Rating at Cassa Depositi e Prestiti. And I know that Gianfranco has just been nominated President of the Italian Investor Relations Association. So congratulations, Gianfranco, and thank you as well for joining this webinar. So let's get cracking. Let me see if my slides are working well. Great. So just a little bit more about Impactivise. So as I mentioned, we help CFOs, IROs, and CSOs globally to enlarge the investor base through the lever of climate finance. Myself, I've worked in asset management investments for about 20 years, and I founded Impactivise in 2022 to do exactly that. We have an operating team, Silvia and Georgia, and some high-level senior advisors, Michelle and David, who have experience in top companies leading really from a climate finance perspective. We've worked with more than 20 plus clients since 2022, involved in more than 4 billion of inflows of capital raising, and have a very strong investor network in climate. What's the agenda? So I'll go through a little bit of what we think has changed and not changed. Some of the questions, like really the question we received today from CSOs, CFOs, and IROs as it relates to climate finance. I'll introduce briefly our framework, the Seabridge framework, and then very quickly we'll go into the debates with Patricia and Gianfranco and the Q&A. We won't go beyond 45 minutes. That would be the top maximum for this webinar. But of course, we'd love to have your questions. If you have some, there is a Q&A box. Please don't hesitate to put them on, and I will try to answer those questions as we can. So let me start with a bit more content. So we published this article about, the link is here, 2 weeks ago, what now for CFOs, IROs, and CSOs. I will highlight 2 points, really 2 points here on my side. So first of all, big confusion. There's a lot of confusion on both sides, both on the investor side and on the corporate side. What I mean by confusion, on the investor side, there is, in my opinion, a recalibration of what good looks like. Okay, what should be a credible climate objective? And that recalibration is happening as we speak. And on the corporate side, there's a question of again, which type of ambition would align to investors? What type of commitment, what type of related investment the company has to make, and what's the value from it? So that dialogue is happening, not happening, but that things are in motion at the moment. The second point I wanted to highlight here is that we had lots of climate commitments in the last 3-4 years. and investors are moving from climate commitments to scrutiny on capital allocation. What I mean by that is, call it a climate commitment. There is someone joining in. What I mean by climate commitment, call it, for example, a net zero by 2050. That's still obviously good and relevant, but there's more and more scrutiny in terms of what in this business cycle the company is investing in. But you have more on the blog, and we'll discuss. What has not changed, though, and which is really the basis for, in a way, this call and the conversation that we have with investors is actually, with companies, is that there is a strong demand for climate-aligned assets and business plans. And here we quantified the numbers. For anyone who wants the detail behind the numbers, happy to send that by email. But you can really clearly see that there is more demand than supply. The demand we see is really anchored through institutional investors, those long-term investors, not the ones who want to outperform the market in the next 6 months or 12 months, but the ones who want to invest in the winners in the next 5, 10, 15, 20, 30 years. And with that, there's a very strong focus on risk management. So that has not changed, and that we'll discuss it in the debate. So what are the questions we receive from CSOs, CFOs, and IROs as we speak now? So one question is, how do we attract climate investors into our stock? Generally, that comes from an IRO or a CFO. Of course, this helps with valuation. How shall we communicate our revised climate targets? Again, that period of reassessment. What climate assessment to choose from? There are many out there. Some that actually are not paid for, some that companies can pay for. There's a lot there. So which one really are value for money? And in fact, how can sustainability initiative be value for money? That was a question from a CSO. Another question about methodology on avoided emission. Is it credible? What can be improved? Last one, we won't make the SBTi target. What shall we do? So how do we address those types of questions with our clients and the companies? Well, let me introduce very briefly the C-Bridge, our framework we've worked on for years. C stands for bridging climate and capital. And there are like 4 main pillars. But the starting point are the metrics. What are the objectives? It could be increasing the percentage of climate investors, reduction of cost of capital, or increasing sustainable financing. C1 is the clarification. And that's actually a very important point for this call. And I suppose CFOs, CSOs, IROs in this call, there needs to be an alignment between those professionals within the company on what's the ambition, what we're trying to do here with a climate finance framework, one way or another. How do we stand as well with the peers? And then we can do some feedback from investors. Once we clarify the objectives, let's construct that finance framework. But to construct it, we need to have the climate a basis for claiming a climate alignment one way or another. Can start from an energy efficiency project to a transition plan. And there's a lot in between. If you have CapEx and OpEx, of course, interesting for thematic instruments. And then the use of frameworks that can add credibility, frameworks or assessments. Once you craft the narrative, really important, the messaging that needs to be aligned between CFOs, CSOs, and IROs within their message. And in that message, really, especially in this environment, it's about how that climate action, that climate finance strategy adds value to the company. And then the 4th bit is the connect. Of course, this needs to be, that narrative needs to be fed and continuously target those climate investors. So this is a framework that really helps address those questions one way or another. But let me stop here. And let's go into the conversation and the debate. I think we are doing well on time. So let's bring in Patricia and Gianfranco. And let me ask first the first question, and perhaps if you want to introduce yourself and your company a bit more and better than me, please do. What has changed, in your opinion, in the last 6-9 months? And what does it mean for your companies? Over to you, Patricia.
Thank you, Fabrizio. Good morning, everyone. I'm Patricia Gentile, Group Head of Finance and Insurance in outweigh. I joined the group 5 years ago. And for those who are not very familiar with my company, we are a multi-utility in Italy, listed company and international player, running our business in different sectors, from generation to waste business, distribution and retail market. Over the last 12 months, investors, this is what we have seen so far, have become more pragmatic and data-driven about climate finance. Despite what is happening on the other side of the oceans, especially in terms of strong statements and the simplification of the omnibus package, we do see that the enthusiasm hasn't disappeared at all. So what we have seen instead is that the focus, as you said, Fabrizio, has shifted from broad ESG commitments or targets, okay, to credible, measurable, transition plans. Investors are looking for evidence, more real evidence. If we think about emission data, for example, CapEx aligned with the net zero targets, financial materiality, rather than long-term targets. Obviously, when we speak about investors, we have to distinguish between equity investors and credit investors, because they have a different term of their investments. One is more short-dated, the other one is long-term. And but this is what we are seeing. Another important thing is that we do see a greater scrutiny on greenwashing. And we have read recently some interesting data. They were provided by a bank covering us, saying that about 65% of the world's largest asset owners now explicitly consider climate change in their investments, which is a huge number, and about 45% have committed to decarbonizing their portfolio. So for us, this is all good news, obviously, because as a outweigh, we are very committed to decarbonization and in general to sustainability. What I have said is also confirmed from the success that 2 transactions we made this year have gained. The first one was yellow green bonds, and the other one was the blue bonds. We received huge amount, sustainable climate demands, especially a high percentage of very dark green orders. And this is confirming that the trend has not disappeared. Instead, if anything has changed, our perception is that it's going on the right way. So we do see investors more and more sensible to sustainability.
Thank you, Patricia. That's really interesting, and congratulations on the bonds that you placed. Gianfranco, as an investor relation officer, you are front and facing investors. What have you seen in the and I know you're traveling a lot, you meet many investors. So what have you seen? Has anything changed in your opinion?
Thanks a lot, Fabrizio. Thanks for inviting me. And a few words about CDP. Myself, I'm the head of investor relations and rating at CDP Group. CDP is the national promotional institution of the Italian government. It is classified as what investors call an SSA, so a space which includes sub-sovereign and supranational agencies. And basically, we promote the Italian economy, so gathering money on capital markets and from retail savers, namely postal savers. And we invest to support the economy, so infrastructure, corporates, and lending money to SMEs, for instance, for project finance to inject capital on long-term infrastructural projects, and but also many other activities like development finance and blended finance, etc. What I saw in the past months, many aspects that Patricia already mentioned, for sure. I saw same trends and dynamics in the market. And probably I see some divides. First of all, if we look at the global assets under management in terms of stocks and flows, I will say that there is, and I confirm what Patricia just said, I will say that there is not less appetite. Indeed, there's been an increased volumes in first half of 2025 of global stocks or sustainable stocks. But if we go into geographical breakdowns, and particularly if we look at the flows, of course, there is a huge divide in this moment between US versus, let's say, non-US geographical jurisdiction. And clearly, if you look at the numbers in US, there is less appetite for ESG investing. And if you look at the funds, there are many outflows overall. On the other side, in Europe and other geographies, there is still appetite, and there is an increased appetite. So first of all, I see a geographical divide at the moment, but I think it's in line with the fragmentation that we are appreciating at the geopolitical level worldwide in this moment. And then there is also a divide in terms of investors. When you look at long-term investors, long only pension funds or investors that generate value over the long term, I see that not depending on geography, there is still appetite for ESG investing also in the United States. So I will say much depends on the geography and then on the type of investors. Overall, there is a ample demand, just the graph that you, Fabrizio, showed at the very beginning of the presentation. There is huge demand from investors. At the moment, there is ample liquidity, and we observed also in our recent issues, we have tremendous oversubscription of our bonds recently. So there is a strong appetite overall in general, and of course, going back to the ESG investing, investors are becoming more and more sophisticated. As Patricia said, I will say that they are not relying anymore much on standard labels, standard scores, or ESG ratings. I think because there's been too many labels and products like this on the market. They are confused. There is lack of standardization. Think about, you have many frameworks. Think about ICMA, UGBS, and think about MCI, Bloomberg, etc. So what investors want to say is a real commitment. So truly committed to investing in ESG. So I will say the purpose and the strategy in terms of ESG advancement and sustainability is more important than showing the label, one of those labels. So they wanna appreciate the transparency. They wanna understand that your strategy is credible. It is not an opportunistic approach. So it is embedded in the long-term value of the company, and they wanna measurable, as Patricia said, again, measurable KPIs, and maybe not again using this kind of external provider, not anymore as provider of standards label, but more as provider of data for using them for internal score. Through which they assess the corporates. So I will say transparency, I will say credibility, measurability, all those things matter a lot for investors at the moment.
Thank you, Gianfranco. And so we seem to agree that there is strong demand, although geography is, it's not just a blanket strong demand. There needs to be differentiation here. and investors are sophisticated. Now, if we turn towards the companies, okay, and I wanted to bring here Patricia. I mean, of course, you're leading on sustainable finance innovation. So can you tell us, so we have in the call here companies mostly. Can you tell us the internal view and how this collaboration I was talking about between finance, CFOs, IROs, and CSOs, how does it have to happen internally? What's your take on that?
Thanks, Fabrizio. First of all, I would like to highlight the fact that sustainable finance in general for outweigh is a key lever to implement our business plan. We launched almost 5 years ago our new business plan, which is a 10 years business plan, giving enough time to investors to see the deployment of infrastructure investments. You need more than 3-5 years to see the evidence of those investments. But on the other side, we set a lot of sustainability targets, and also for sustainability, an horizon of 3-5 years is too short. This is why we wanted to have a 10 years business plan. So about 22 billion on sustainability, it means that sustainable finance has a key role on our side. In terms of what we have done so far in the last years, we have been innovator, yes, and quite enthusiastic about the job we are doing every day. And for us to be innovative in sustainable finance, meaning having more access and flexibility to the market. So if we put our company in a situation whereby we have more than instruments on sustainable finance, and I will be more precise later, it means that I give my company more than one instrument to go to the market and to be successful in the market. What we have seen so far is that market is still appreciating an instrument in sustainable finance, investing in sustainable finance. And this is why we are still opting for our financial strategy to issue instruments like that. So we issued green bonds under ICMA framework. We have been the first one issuing EU green bonds. We really welcome the new regulation because at least it's a way to standardize. As Gianfranco was saying, we need standardization. Investors need standardization to make things comparable. And then we did the blue bonds. Obviously, in our framework, we still have the sustainability-linked bonds, although we are not using them, but that we want to use them if we find the right spot in the market. This story about credible, let me say it's a success in sustainable finance on our side, obviously it has been done by the work of different people in outweigh, okay? Because it's not just a matter of finance, okay, under the CSO departments, but also is a collaboration between different departments in our company. It's not only about sustainability, it's not only about investor relations. I might add that strategy has a key role as well, but also the industrial side of our company. So, because if we have the right capex to invest, and if we do the right investment, it means that on the industrial side, we are doing the right thing, the right investments, and we are deploying our investments. So it's a matter of having all the right people at the same table. But this is not just something ideal. So you have to put everything in a formal organization inside. So it's a matter of having a governance, a proper governance inside the company. For example, for our sustainable finance, we have set a committee, the Sustainable Finance Committee. This committee is chaired by me. And I have at the same table strategy, investor relations, I have controlling, and I have also sustainability. We are all making together decisions about the sustainable finance of outweigh. Then obviously you have different departments. We do the structuring of the transaction, then I have a department mapping the alignment of the CapEx. So you have a very key role within the company, and everyone has really a unique role in all this process. But again, also in terms of being transparent with the markets and compliant with the markets, also investors should know about the governance around our sustainable finance. So this is how to give you an idea on what outweigh does when we have obviously to structure a transaction in sustainable finance.
Super, thank you. What strikes me is obviously that cross-functional team, which is really, really important. So it's many functions. In fact, Gianfranco, if I bring you back in, as an IRO, how do you see your role there in terms of like, you represent the market, you have the view of the market. Is your job just stopping there, or how can you influence that table of discussion that Patricia was talking about?
No, I think the role of the investor relations officer is very important, because many of the people that work on sustainability inside the companies do not have external stakeholders. Think about the planning. No, when you think about the ESG plan, of course, when you prepare an ESG plan and then you want to approve, so you want to submit to the board of directors, this you need to prepare this in line with the budgeting exercise, no, or the capital allocation, and typically those functions, those teams are internal; they do not have external stakeholders, no. And the reason why the IRO is important is that from the outside, from the market, you can bring into the company the market view, what investors like or do not like, and not to mention the dialogue with the rating agencies, both credit and ESG. Because now what I see is that on the one side you have the ESG rating agencies, purely ESG. On the other side, the credit metrics are starting to incorporate also the way in which the company is managing ESG risks within, you know, the framework of the credit rating. So the dialogue with both credit and ESG rating agencies is very important, and to bring into the company, and to also to speak with the chief sustainability officer or the people who are in charge of preparing the investment policy of the company. I mean, they need that kind of information, and IRO is the only one that can that can build this bridge between the market and the company. I think this is the key role that we have, and many of these functions are going back to what Patricia was describing before, are very close to the CFO department, because when you think about the CSRD, so which is accounting, when you think about planning, both ESG and non-ESG, when you think about ESG ratings, all of these things has to be close to the CFO department. Then you have a part which is more, strategic. Let's think about the policies. Let's think about, HR policies, for instance, etc. That can be also outside the CFO department, can be, if there is a chief sustainability officer directly reporting to the CEO. But apart from these strategic aspects, the rest of these things are very close to the CFO department, and also because of this are very close to the investor relations.
Super. Thank you, Gianfranco. I have actually two themes I would like to explore here. But on Patricia's side first, and I know that Karina wants to ask a question. Just a little bit of patience. On So you mentioned that you have CapEx, climate aligned CapEx, let's say, and you've been doing that for a long time. Okay, so you have a long track record. Now we have companies on the call who perhaps are not are starting the journey now. What would be your advice to CFOs of those types of companies? CFOs, IROs, well, a lot of people, but what would be your advice for those executives starting the journey? And perhaps they don't have those types of CapEx that you have.
Thanks, Fabrizio. Maybe it's not just a matter of CapEx, but also it depends on how big is the company, no? And how structured is the team and the organization, because all these kind of activities that we are describing, so we are a listed company, so we do transactions on a frequent basis. We are quite structured in terms of internal competencies. We have a lot of people with the right skills in different teams, and also CSRD has introduced more job on our side, so we are very skilled, no, to be compliant with what the new regulation is asking for. So for a new company, and maybe the simplification of the omnibus package was going in this direction, is that the situation can be much more difficult, no? Because when you start your approach with sustainability, first in terms of investments and then in terms of sustainable finance, if you want to finance your investments made in sustainability, it means that first of all you have to focus on what is the strategy connected with the sustainability, because first of all you need to have a strategy behind what you have to do. You still have to have a connection with the financial aspect of your investments, because as we do in A2A, when we run our investments, we have three main drivers: strategy. Okay, we cannot invest in everything. We have to have a clear strategy to invest in. Then we have ESG factors. So we have different options, and one of the drivers, maybe we do select the best option in terms of sustainability, and then we have the financial driver. Obviously, we have to have a look at the returns, obviously the remuneration of the investments. This on one side. On the other side, you need to fund, okay, all your investments. And for a player like us, it's very easy, because now we are used to those kind of activity. But for people who have just started the journey, it can be much more difficult. First of all, I would say that maybe the banking system can offer an easier option, no, rather than going to the capital market. Maybe you have less compliance, less documentation, although the banks obviously are still focused on ESG aspects. Maybe the requirements can be a little bit less demanding. On the other side, although they are not required, I would always recommend to set proper KPI, proper impact KPI, and to do a bit of activities and have an interaction, and a kind of interaction with investors, because this is happen also for us. When all the sustainable finance happened, it was just, okay, we have a label on our instruments, but investor will start also evaluating the issuer. Okay, but the label on the issue maybe was the first compliance for the investors putting money on the bond. Now, after a few years of market development, what we see is the other way around. So the evaluation is on the issuer, then they look at the label on the bond, and if the issuer is compliant, then they buy also the bond with the label. So something that Gianfranco was highlighting before. So because the investors have become more sophisticated, they have developed internal way to rate, ESG rates us, and this is why for a new company, my suggestion is that you need to have an open and transparent discussion with your investors, show your sustainability, and I'm sure that you can still do, okay, although you are not big as A2A or CDP, your sustainable finance. with the right investors, maybe you can do a private transaction, and you also have the banking system. But you need to be compliant, you need to be transparent, you need to set clear targets, you need to show some evidence of your trajectory to a decarbonized world. So this on my side.
Super, thank you. And yeah, your point about you need to engage investors, this is something that we always advise companies to do. But at the same time, as you say, you need to be prepared. You don't just go and have a chat in simplest terms. So we don't have much more time. I wanted to ask, another theme I had in mind is how you address the disconnect between perhaps what investors want, let's call it 1.5-degree trajectory, and the reality. And we have a question from Karina. I think I can open let me see what I can do. I can allow for the mic, Karina, if you're okay. Do you have a question? Can you hear us? Or if you want to put your question in the chat.
Now you can hear me. No, can you hear me?
Yes.
It's quicker if I just ask it. So first of all, I want to commend you, Patricia, and also Gianfranco for actually really majoring on the governance issues surrounding how the terms of green financing instruments are defined, and how you bring in all the different experts, and Gianfranco, how you act as a bridge between the market and the internal stakeholders. I think all that is incredibly useful to get a window on how you do it. What I would really like to understand better from both of you is how you ensure that the performance targets that you define and incorporate into these instruments are tested, given that investors, and I used to be one, are the first to admit that they lack the expertise to really gauge how appropriate they are for your business. In other words, investors have, some, not all, but some have a decent understanding of what, major global goals are, but it's very, very difficult for them to convert those into specific outcomes within each of the different organizations in which they invest. And so it's very different from a credit rating, where there are, much more well-developed indicators for what constitutes a solid credit. So,
Super, Karina. If I understand well, the question is, how do you make sure that the KPIs that the companies are setting themselves are achievable? So let's perhaps
No, that's not what I asked. I didn't ask whether you were sure that they're achievable. I asked whether you are sure that they are credible and genuinely aligned with what is required, because companies are very good at identifying what they're able to do. I don't think anybody would question that. But what's difficult to ascertain is whether they are aligned with externally defined deliverables around, let's say, achieving net zero or protecting nature or whatever the type of KPI it is that we're talking about. So
Thank you,
the issue
Karina.
is really, the issue is really about marking your own homework and how you ensure that that's not the case.
Great. I think Patricia wants to answer. So.
Yes, I'll try to answer if I got properly your answer. If I'm referring to our bonds, so our transactions, in terms of impact, in terms of KPI, we have standard documentation to use, so that are also verified by the external verifier. For each bond, we do issue every year allocation report, but also impact report. And the new regulation is setting standardized documentation of both allocation and impact reporting. And as I said, those documents are verified by an external provider. So in terms of KPI we have set, referring to obviously the transaction we have made and in the sustainability space. If I look at our targets in terms of decarbonization, net zero, for example, as a company, we run external assessment. We had SBTi, and we had last year the Moody's assessment. And so just because we don't want to be self-referent or ourselves. So we are telling the market about our decarbonization part, about our sustainability impact, but we are using what the regulation on one side and in general the best practice and the market gave us in terms of documentation and in terms of compliance. So using third-party opinion to assess what we are doing. I don't know if...
Thank you. You've answered my question perfectly.
Great.
Thank you very much.
Thank you. And yeah, we didn't go into that, but that element of climate assessment is not, you know, it's a big topic, and there's a lot there, and it's evolving on a daily basis. We did go ahead.
Let me just add to to reply to Karina's question. On our side, we do something which is very similar to what Patricia is doing in her company. So we issue use of proceeds bonds, which means that the money that we raise, we allocate to specific projects. So this is clear. We monitor the projects. There is a third party, a second party opinion provider, who's gonna test both the bond and the framework that we use. We use a green, social, and sustainability framework. At the end of at full allocation, we publish, and it is public on our website, a report in which we basically track all the proceeds of the bonds and the projects to which they have been allocated. And but let me go back to my previous discussion. Ideally, in the future, we should live in a world in which we don't need use of proceeds bonds or labels or test or standardization. Ideally, in the future, investors should be, I mean, quite sure that the ESG strategy of the company is credible, clear, transparent, up to the point that we will not need anymore any third party that is who's gonna test this. Because if there will be full transparency on the use of on the plan, on the capex and everything, so investor will not need the label. But this is for the future, I mean, no. So that's the reason why I said before, purpose and strategy is becoming more and more important than a single specific label. On one of our last issuance, so we had like 20 times oversubscription on a conventional bonds, and we had many ESG investors in the bond, even though we didn't have any label. Why? Because they believe that our sustainable strategy, our purpose is credible. That's the reason why they're gonna invest, because they know the business model. No, I don't know if I was clear enough on this.
Thank you.
Yes, thank you. That answers my question also. Thank you.
Thank you, Karina, as well, for the question. Now, we need to close. We could go on, and we can obviously continue the conversation offline for anyone interested. Let's finish off with your top tip in terms of, for our listeners, especially in the companies that want to strengthen their climate credential with investors. What would be your top tip, Gianfranco, and then Patricia?
Shall I start?
Go ahead, Patricia.
Yeah. Go ahead.
Okay. So on my side, the top tip is to speak the same financial language. It means that we need to apply transparency, we need to apply clear commitments on sustainability, but also we need to be very clear on value creation, because on one side we have investors. Obviously, they will look at our sustainability, but they also will look at value creation. We need to fill this gap, because as of now, there's a kind of gap between the sustainability targets and the time we need to reach those targets and what the investors ask for. And so when sustainability, when finance, when investors messaging are fully aligned, I think that we will be in a situation whereby investors can see our strategy very credible, and all the parties in the market will have a win-win situation. So we need to be very, very good at having, on one side, sustainability, and be very good at communicating to the market how sustainability can create value for a company.
Thank you. That's really good. Excellent. Gianfranco, on your side.
Starting from the last word that Patricia used, mentioned to communicate. How can you communicate to the market? Of course, you can use press releases, website, etc. But I think what is most important is the engagement. You need to engage both investors and raters and and validators. You need to speak with all of them. That's the most powerful way to to be really effective and efficient as well in communicating the company strategy outside the company.
Yes.
Superb. Thank you very much. So let's,
Fabrizio, if you have demands, I will be more than happy to reply off the record. So
superb. Thank you very much.
Me too.
Yeah, great. Happy to, if you have any question, please don't hesitate to reach out. That was a Q&A session. Let me say, sorry. There's more resources on our blog. We write about all those topics on a regular basis. Please don't hesitate to register. And thank you for joining. Thank you, Patricia. Thank you, Gianfranco. Thank you, Karina, for the question. This webinar will be recorded, and we'll send it to all the participants and all the people who were registered. Thank you very much, and goodbye from London.
thank you. Thanks a lot, everyone.
Goodbye. Thanks a lot.
Bye.
Goodbye, everyone.